Welcome to the December 23rd, 2019 Advance Report from McGowanGroup clients. Merry Christmas, and NetWorthRadio.com listeners. I am Spencer McGowan, President, McGowanGroup, your financial weatherman with your fast-paced global tour of the markets this week and, of course, 2019 leading into 2020, some investment strategy research that you're just not going to get anywhere else. So thank you for tuning in. Be sure to subscribe and share with your friends. It's a great way to get your buddies off your back if they're hounding you for financial advice. That way you're not on the hook. You could just tell them to come here. Okay, Dow Jones Industrial Average launches most of our weeks. Total return for the year, 25%. Oh my gosh. I will hearken back to last Christmas. The Dow was 22,000. It was a looming recession. We kept hearing global slowdown and all the bad things that were going to happen. The Fed was going to raise rates all year. Boom. Much different picture. And the Grinch last year hit virtually everybody in the financial markets. This year, the Grinch seems to be contained within the Washington, D.C. Beltway, as the Grinch is there. Not here. Santa Claus rally. That's the big story of the week. All right. The NASDAQ Composite Index. Whoa. Technology is a 35% gain for the NASDAQ. It was a year for technology. I'm going to harken back to 1999 because we're partying like it's 1999. Tech is on fire. Apple's worth more than the entire U.S. S&P energy complex. Yes, at about $1.2 trillion. What does that tell us? Well, from 1999 through 2004, over that 5-year time period, the NASDAQ, after the 5 years finished, was about a little less than half price. The S&P energy complex had tripled. There's a clue for next year. Let's look at performances, other performances. When we go forward here, we're looking at global high yield. That's a 23.43% return for a fixed income category. That's one of the things we were featuring at the end of the last year. We don't always get it right. Yes, there is price risk, but the global high yield category is still available at good yields and a discount to par value under control according to our research. So kudos to global high yield. That was one of the best opportunities in fixed income for 2019. And competitive with equity. Here, energy infrastructure, our largest holding in energy infrastructure, is 22% total return so far this year. This bounce I want to talk more about. Oh my gosh, what happened? Tax loss selling, fossil fuels unpopular with some pension plans, and the pipeline index. I'm going to come back to energy infrastructure here in just a second. What's ahead for the next year or two? Well, S&P 500, the analysts predict earnings will do this. That's about a 20% increase in the quarterly after-tax S&P earnings. Can they fulfill it? Notice this year you were in an earnings recession. Some of the correction in 2018 related to that earnings recession. Can they blast above $40 per S&P unit per quarter? Well, it says they can go all the way above 50. Is that true? Are the analysts too optimistic? When you tune in to McGowanGroup YouTube, we'll give you an update on how this is actually transpiring because these are warning shots, and if they happen in the future, we'll be right here with you to let you know how to unravel it and hopefully protect. This is just 1 month, the month of December. The reversal in energy corresponded to about the time tax loss selling ends, somewhere between Thanksgiving and mid-December. But the S&P 500 energy complex, one of the superstars of the month, up nearly 5%. What outperformed it? Well, the pipelines, month to date, and this is oil and the pipelines, well, the pipes are up almost 9%. Oil's up about 9% at $61 a barrel. That's driving some interest for 2020 in the out-of-favor energy infrastructure, which has already been through a bear market cycle. So the balance between dividend companies that appear to be poised for extraordinary performance, even if there's an overall bear market cycle or a pullback for a while. Then you take the global high yield opportunity and safety and income. There are floating rate loan funds at near 5%, not without price risk, and money markets are at 1.5%. So now you've constructed a well-diversified portfolio across asset categories. Punch in NetWorthRadio.com, set your time to come down, meet the team that cares for a 1-hour brainstorming session. Just fill out that preliminary client questionnaire. We'll be back next week with your 2020 preview. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 2002, 2008, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.